Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We have the Dow Industrials down 158, NASDAQ off 33, S&P's down 20, gold contract down $11.90, traded at $1,051 an ounce. Gold, folks, is pushing on its bottom, on its lows, had 113,000 contracts. Now, that's light volume, but you had fast price destruction. It looks that gold more than likely is going to spike lower tomorrow. I expect you'll see a rejection of lower price, but the way that it's just laying at those lows, it looks like that's what it wants to do. Silver, down 9 cents, $13.98 an ounce. Platinum is off 8 at $8.30 an ounce. Copper is down 2.5 pennies at $2.04 a pound. Light sweet crude, okay, light sweet crude, folks, broke $40. You're down $1.70. ABC structure on the way down. It broke its B point, broke it with volume. You get a price projection of $35. This is going to be pretty intense, man. When the oil market did break, bottom line, that is what started taking the S&P south. All the oil stocks went south. Oil stocks are a large weighting structure inside the S&P. That's what took it down. Looks like we're going to have very inexpensive energy this winter. Bonds, the 10-year down 9 ticks, 126.21. That wants higher price, lower yield. 30 up 5 ticks, 156, same setup there. The 30, folks, is almost at its highs. Good old King Dollar. King Dollar up 185 ticks, 100.02. Now, that looks pretty good. Bottom line, King Dollar was up 500 ticks. Now, it had juice behind the move. You did 36,000 contracts, so that's a big number. That is saying get a test of that number once again. I suspect what you're going to see, however, is you're going to see lower price. More than likely we're going to see it tomorrow. And where I'm going with this whole deal, folks, is the European Central Bank. Draghi's going to be coming out tomorrow morning. What the statement, the speculation of the statement is going to be about is that there's going to be more monetary easing in Europe. The way this market is set up, it doesn't look to me like that is what is going to fly out here. The reason I'm saying that is that you have negative rates in Europe already. Our bonds are going higher, lower yield. The dollar is at highs, no doubt. If, in fact, Draghi comes out and does more monetary easing in Europe, you're going to go from negative, the 5-year negative rate right now in Germany. If you give Germany 5 years for a bond, you have to pay them 0.4% per year. Okay, so that's you're paying them 2% of your money over the course of 5 years just to hold your money. You get nothing. Okay, so when I look at that and look at the aspect that, okay, are they actually going to go and do more monetary easing in Europe as we are going up in rates? I can't wrap my head around it. I just, so I can't wait to see what happens tomorrow because, every which way I spin that deal, it's just like, if that happens, guess what's going to happen? What simultaneously would happen is this. Picture that we're all in Europe for a second, and we're big corporations. Where would you put your money? Immediately, you'd be pushing as much money as you can into the United States. Why? Because two different things end up happening there. If the monetary easing goes further, your euro goes down. You're already getting negative rates. The dollar goes to the moon. We're getting positive rates. What's going to happen? Well, what would seem in a common sense way would happen is that huge amounts of money would come into the United States, into the bonds, bringing our rates down also. So, hey, we'll see what happens. But that's why I think we all love markets, because we're going to get a really sweet learning curve, folks, in, I would say, the next 6 months to a year in all of this, because of the fact, number one, that, we went through a depression. You had the monetary easing. It's like no one that's alive at this particular point anyway really knows hasn't been through that cycle. That's what it comes down to. So it's going to be cool watching it shake out. Euro is down 19 ticks at 106, and the yen is trading at 123.23. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Can you spell failure? That's what you have, folks. You got to a higher high. S&Ps, the SPY got to 211 today, closed at 208.52. Benchmark that we've been talking about, November 9th benchmark, that was 209.49. You closed below it. That had 131 million shares, so what do? You went to a higher high, had lighter volume, closed underneath it. That's saying market wants to go lower. Last swing point in the SPY, 202.18. That's where this thing, I suspect, is going to make a run down to. NDX 100. Now, the NDX 100 took a while to break down today. NDX 100 was strong all day. The Qs, they went to 115.75. The benchmark is 114.51. 33 million shares. Same setup, folks. Harmony in the marketplace. You went to a higher high. You closed underneath it. You had lighter volume. We had lighter volume, folks, by 10 million, or 33% in the Qs. There's no buyers up there, man. There's sellers. Distribution in spades. Bottom line, both those indices failed on price, failed on volume. Small caps. What do we have with the small caps? Small caps got to a price point out here today of 120.04. Bottom line, that also got over the November 9th high, closed underneath it, did 22 million shares versus 32 million, 33% less. All of the above, bottom line, what does that set up? That sets up lower prices coming at you. Oil. Oil market, folks, is in trouble. The oil market out here today had wide price spread. We went from 41.97 to 39.84. You had 518,000 contracts traded, and bottom line is that this is an ABC structure on the way down. And so we broke the last swing low out here, which was August 24th. That swing low is 39.97. We hit 39.84. 35 bucks coming at us, and that's going to be really wild. If we actually look at a continuous contract, the continuous contract, I believe, is 32.40 that we hit in 2008. Let me just see this. Yeah, 32.40 was hit in December. Oh, that's really wild. It was December, too. December of 2008. Hey, it's out there. It's out there for what? It's out there to get hit. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.